Welcome to the GSX Podcast, where we explore the evolving landscape of commodities, trading, and alternative capital. Hosted by me, Henry Walsh, and the team at Great Southern Cross Commodities, the podcast brings together market participants, managers, and investors to discuss how capital, policy, and innovation are reshaping the global commodity markets. From carbon to coffee, energy to macro, we cover the full commodity investment universe, unpacking the trends, risks, and opportunities that matter. Please note, the views and opinions expressed on the GSX podcast are those of the hosts and guests and do not necessarily reflect the views of Great Southern Cross Commodities or its affiliates. This podcast is for informational purposes only and should not be considered as financial, investment, or trading advice. Listeners should conduct their own research or consult a professional advisor before making any financial decision. Welcome to the GSX Podcast, episode number 1. My name's Henry Walsh, and with me today is John Watson, Senior Advisor at GSX. We thought we'd kick off the podcast series with an intro episode. So today we are talking about a little bit about ourselves.
Thanks, Henry. Look, I've been in the commodity markets for the last 30 plus years. I think it's about 31 since I started after having completed a science degree at University of New South Wales. For most of that time, I've been working in financial institutions like banks, working on bank commodity desks. So I started in that probably about 2003. With Macquarie Bank. Before that, I had cut my teeth in physical roles, so working as a physical exporter, / merchant in the wool industry, and then transitioning over to grain. Getting into the financial institution side of things and working on bank desks was really around the build out of agricultural commodity trading desks. And over the journey, I've been involved with probably 3 or 4 pretty major build outs. And I guess renovations of existing businesses. So that's always been a fairly challenging area to be in, having to start or rebuild a desk. Yeah, it's been really a really enjoyable one as well. You know, when you take something and you turn it into a successful business. So my last role was at NAB, which is where we work together. And I spent 11 and a half years there, and I finished up in 2023. And decided it was time for a bit of a change and time to get out of the corporate space. So I'd been working on a little bit of a project there with a good friend of mine, and that was more in the asset management space. So we are working in the business of buying land up in central Queensland and converting it into macadamia orchards. And, that's been a really enjoyable business to be involved in and one that I think will be ongoing for the next, 15 or 20 years. And then I guess 12 months ago, we had a good chat and decided that there might be some work in the consulting thing for me, which has also been really, really enjoyable and challenging as well, because sitting in a trading business, you're sort of hidden from dealing with clients and the general public, and now you have to go out and look for work, do projects, all those sorts of things. So yeah,
I think in terms of build outs, I think that's something that I've always kind of found enjoyable. Is that something that you prefer, going into something where you can put your stamp on things, or would you prefer to be more an established business? Sort of over the course of your career, you've probably done a little bit of both. So how have you found that?
Yeah, look, I think it's probably the way things have played out more from necessity, where, you've come into, especially banks, where commodities is often in the back corner of a bigger business. So, you get there and you see there's a lot of potential, and being, I guess, reasonably competitive and hungry for success, you push really hard to try and make the most of the position. And then once you do lay down a template for that and you can do it, then you realize that it's really rewarding, and you get noticed, I guess, too, when you can have that sort of success in a short period of time. Often, if you're starting from like a green field and building it up, You have to run really hard to get things going. But after that, you could sort of start acquiring assets, as in people, the right systems. And I think it's you notice what changes you're implementing, could pick up in P&L and revenue. So it's that sort of exponential growth phase that you go through, which is the really rewarding part of it.
What do you think are the building blocks of a good trading business, whether it be at a bank or in another type of institution? What's your sort of the things you feel like you need to have in place to be able to build a successful business?
Oh, look, I think it's the people. Definitely one of the big things. And if I look at the successes that I've had in my career and the businesses that I've worked in, it's always come around like a good team of people buy into the collective vision of where they want the business to be. And, they've got to be hungry individuals as well. I think the people, and then you have to have like really robust systems. I think for me, the big eye opener was going from, say, CBA to UBS and then JP Morgan. And, when we got to JP Morgan, there were the right people at the senior management level who had the buy-in, but they also had the systems. And then when the systems get opened up to you, it's just like, you're racing Formula One as opposed to go-karts, which I think we've had that conversation a few times. Yeah. But I think that's it, people and systems. And from that, people feel enabled, and that means the culture builds itself, and then you're sort of right.
So what do you think about, you mentioned management there. I think how can senior management especially a financial institution, or maybe it's the head of the fund or the head of the trading business, sort of influence how a desk is built out? Because, trading and managing risk is high pressure. It also requires you to be, aggressive, not all the time necessarily, but you'd also need the right culture of, taking the, risk within boundaries, but not going overboard. I mean, how have you found that at, different places, and how have you managed, as you, obviously progressed in your career and managed junior traders, how have you sort of thought about that in terms of taking risk and managing risk and being prudent?
You need at a senior management level, you obviously need a champion of the cause and people who understand what your vision for the business is. And once you have that buy-in, then I think you establish quite quickly what the playing field is, around, are you enabled to take big risks, or are you servicing a franchise type business? And then once that's like, so I guess that senior management set the scene and lay out the playing field. And then I think most people who have traded can adapt to either, but that you have to have that really clear. And then when you start talking, to people who are coming into the business, especially young traders, it's really up to you to be to relay that message and set the tone, and to make it really clear to them, this is what we're doing. And, definitely that takes a bit of practice, and it's an experience thing. I've definitely had missteps where you don't do the right communication and you don't explain to people, this is what we're here to do. And next thing you know, they're operating outside the boundaries of what they're supposed to be doing, and you have to pull them back in. But senior management just have to be on board and prepared to invest in the business, in the infrastructure and the people. And some, in the institutions that I've worked through over the years, some of them have been really good and some of them have been lackluster and paid at lip service.
And what do you think, if you were building out a new business in a bank, in terms of time frame? I mean, what's a reasonable time frame to see some sort of success? I know that's a bit of a hard question to answer because each institution is slightly different, but what would you think is a reasonable time frame?
Oh, from a green field build out, as in, maybe if you have no commodities business at all, it's probably 12 to 18 months, I think. I mean, with the systems, that's the hard one. If you're in a bank and someone says, I'm going to start a commodity business, you can use FX or a rate system. If it's in-house, you've probably got a little bit of a shorter timeline, as in the infrastructure's maintained in-house. But if it's something that's been bought off the shelf and you've got to buy modules and then start a whole project, we know how that goes. That could be years. But with the right mindset and that, I think it's, could be 12 to 18 months, you should be generating revenue within the 12 months, and then it should be a rapid growth from that point.
In terms of, you mentioned when you're at JP Morgan sort of through and post the financial crisis, which was an exciting time to be at banks in commodities. That has changed a lot since then, that environment. How do you see, if you were encouraging younger people in commodities, either in Australia or overseas, to go on a path in commodities, what would you say would be the path these days in terms of a good place to work or a good subset of the commodities industry?
Probably one of the keys for a young person is to get as much exposure to multiple markets as you possibly can. Having worked in an Aussie bank for 11 years, from sort of 2012 through to 2023, that was a small business, but we covered a lot of products. That's a great nursery ground for a young trader because, you're exposed to ag markets, metals, energy, carbon now, and a whole lot of different deal structures and client needs, but it's not a high risk taking type environment. So, it's a good place to get your grounding. So I'd say to a young person, go to somewhere where you get exposure to multiple markets and, being across the whole commodity spectrum, you get to understand processes. Even if it's not in a financial institution, if it's a physical house, you're understanding the importance of logistics movements, and, the grade specifications of different commodities and how the trade flow happens. And then after a couple of, maybe 2 or 3 years of that, then you've got to start to look at, a place where you might want to specialize and go to a big, sophisticated shop. And, that could be a big, sophisticated physical trader or a big, sophisticated financial institution like Macquarie Bank or Morgan Stanley or Goldman Sachs, where you have a really big library of potential products and risks that you can manage. And then you've got your hedge fund space. But then I'd probably say to someone, the hedge fund space, and that's where you get to pick what risks you're taking. Whereas you learn a lot when you've been given risk and you have to deal with the risk that you don't necessarily want. You have a portfolio that never sort of sleeps. Yeah, there's multiple ways to pick it.
I've often found too, some people that come out of banks are great risk managers and can effectively trade the flow very well.
Yeah.
But you put them in a proprietary trading seat, and so they have to think about what they want to take risk on. And it's they're different skill sets. Some people can do both, and some people can't. They're just, very poor at taking risk to make a profit when they're not. So because it is still there, I suppose maybe it's idea generation or a different perception of risk versus in a bank. But as you say, in the bank, you inherit lots of stuff that you don't necessarily want to take on, but have to do for the greater good of the franchise, which is a different type of challenge, right?
That's right. So I think that in those bank seats, you can be more reactionary as opposed to being proactive in what you're trying to do. And you learn some really good skills. Like if you're running a big options book, on energy products in a bank, you could have so much weird risk in there. You're going to have to get to the bottom of that really quickly and understand all the permutations of what market movements are going to do to you. And then hence the need for good systems. If you can do that, and then you can actually start to generate alpha over it by saying, I like this, I like that, and I'm going to run 2 or 3 core risk-taking strategies within that portfolio, then I think you're well on your way to becoming that, that risk taker and that proactive trader.
To sort of fast forward to today, you're, working with me on GSX, which has been in, consulting around commodities, whether it be risk management or new products or advising companies. And then obviously with MNUT, your macadamia business that you have, how have you found the skills that you learnt over the years in trading, how to apply them in different business settings, whether it be in the consulting business with me or at MNUT? How have you found them useful in business in terms of, the next stage of your career?
Look, I think it gives you really good clarity on what works and what doesn't work. And, often when you're sitting in a trading environment, you have to make quick decisions. They might not often be the right decision, but you learn pretty quickly that no decision's a bad decision. So you learn how to make decisions, and you learn how to be very strategic about your approach to business problems. And I think with that sort of lens, you can look at someone's business and you can go, yeah, that doesn't seem to be, that's not a strategic approach there. That's all very ad hoc. So yeah, that's definitely one thing that you learn. And I think getting exposure to different institutions, you have certain standards. So, I mean, I think we talk about like, what would you expect if you're a trading manager at a business? If someone says to you, I want to sell your positions, then you expect to see them very quickly in a short time frame, reports out of systems, out of the machines. I'll get back to you by the end of the day. So you can bring a high standard of how to do business, like what's the best way to skin the cat, basically, and to do it efficiently, especially when you talk about systems, people, culture, and process. I think that's something that's become second nature after working in those sorts of institutions.
One thing just wanted to, what's the lingo, double click on is the decisions. One thing I've found is because in trading you have to make lots of decisions and, even the best traders are only right, 51, 52% of the time.
Yeah.
So you consequently have made lots of mistakes. How have you found that decision-making capability and also the ability, I guess, because you're a successful, trader as well, to then just make another decision as a consequence? So, either change your mind or change strategy or what have you, and then using that in business, like a non-trading business, have you?
Yeah, I think it's probably that scenario analysis that, you think about when you sit down on a trading desk and you're running significant risk. It's like, if this happens, then I'll do this. And if that happens, I'll do, you always have to have a plan and a contingency, and there's more than one outcome at any one time. So you learn pretty quickly the worst thing that can happen is to sit there and go, oh, I'm getting roasted by the market and I don't know what to do. I don't have a plan, So I think that trading environment is very fast paced. So then you can take that skill set and you can overlay it onto a business where you, like, say, be coming to do a piece of consulting work, then it's a lot slower moving and you can see things a lot more clearly because you're not stuck in the middle of it. And that gives you really good clarity. Yeah, I think it's really about being able to make those decisions and having that contingency plan always in your head. And even with like the say the macadamia nuts and that business, having a process of purchasing a block of land, making sure that you've got trees on the way, bringing in the irrigation specialists, getting the land prepped, all those. And look, I'm not a master of that at the moment, but my business partner, he definitely is. And he comes from a completely different background, but he's got that absolutely dialed right in now. We can buy a block of land in September and have it planted out by before Christmas, just because we've done it. Yeah, so it's practice, and you learn how to run with it.
How have you found, tell us a bit more about the macadamia nut business, like what got you interested in the first place as an investor, and now you're an operator and investor in the space. What sort of drove you interest to begin with, and where do you see the business going over sort of the next 5 or 10 years?
Yeah, so that one, for me, it's been a very gradual process. Dyson, who I'm in business with, his family have been in macadamias for 40 plus years. They, initially bought a place up on the Northern Rivers. He pursued it. He's a petroleum engineer, went into private equity, worked over in London, and probably, it could be as much as 10 years ago, we started talking about what different businesses might offer good returns. I've always been, with an agricultural background, I've always been interested in agriculture. Wasn't really attracted to the hard yards of, cereal cropping or livestock. I've had my fair share of working in sheep yards. So, probably in the late teens, Dyson said to me, I think this offers a really good return. If you can, and they'd done it a number of times. If we can take a bare block of land that's been used for sugarcane and convert it into macadamias, you're taking a relatively lower value proposition and turning it into a really high value proposition. The scary thing about it is, though, that, you buy a block of land and your first cash crop is in year 3, then your break even's in year 6 and your full production's year. So it's quite a timeline.
Cash intensive with low cash flow.
Yeah, that's right. If you spend $1 and then you got to basically to buy the land and then spend another $1 to get it up to break even. So, that's year 6. So anyway, probably when I was at a point, probably 3 or 4 years before I left NAB, I was like, this would be really good to get into as that next stage of my working life. And and then we just kicked it around. We bought a little place, like 40 hectares with the trees on it. And then that sort of got us in. We have some investors, getting those investors on board and, those people having faith in us to buy the right assets and then do the build out. And now the first lot of trees that we planted was 3 years ago and they'll be doing their first harvest in March. So we have a 440 hectare parcel of trees now, which has been a really good build out. Orchards look fantastic. We taught there are new generation of macadamia nuts up around the Bundaberg area, and they'll be a high-producing agricultural asset. So, that's been a totally different journey for me. As I say to people, it's been like an internship work experience.
And how have you found in terms of investor interest, because I know you have aspirations to grow the size of the business over time, is it something that there is investor interest or is it too esoteric or not big enough or too big? What's the sort of the feedback that you get in terms of investor interest in that kind of space, natural asset management?
Yeah. So I mean, I guess back to the first question about one of the things that attracted me to it was that as a platform for agriculture, it was, I thought, fairly nature positive.
Yes.
I'm a bit of a greenie. Like I've got, if you come down to my house, I'll walk you through the garden and show you all the trees and the wildlife. Bee and the bees.
Yeah.
I'm a part-time beekeeper. So that attracted to me, and we thought that was a pretty marketable platform, and it's been attractive to the people who have invested with us. To get to that next level where you're talking to institutions, like that, the challenge there is the ticket size. And for them, there's bigger ticket sizes. If you go and buy $100 million of agricultural assets in, say, cropping and mixed farming, you get a lot of land and you get some pretty significant assets, and there's a lot of them too. Like if you wanted to go into the market now and spend between $50 and $250 million, I'm sure there's a number of assets. Yeah. So macadamia nuts is a bit, as you say, esoteric. So you really need someone who's looking to diversify an existing agricultural portfolio.
Yeah.
Maybe got exposure to permanent cropping already, so like almonds or some apples, citrus, that sort of thing. But it's still not well known globally. So Henry, I've been out of the corporate space for 2 years. You left Sydney, was it back in 2014?
Yeah.
And went to probably a bit more of a flamboyant type of institution, and then you've come back here. Like how do you see the environment has changed in that period of time, over 10 years?
I guess there's a lot has changed and a lot has stayed the same, which I know doesn't sound like it makes much sense, but I think, I suppose, what has changed, I think so if we sort of start with the agricultural sector, that second and third tier of traders / merchants, accumulation businesses are all a lot bigger, both in terms of tons and profitability and market capitalizations. Some of those traders that would have had maybe 20 million, maybe $50 million of equity, maybe at the high side, probably more like closer to 10, some of them, are now, well over $100 million.
Yeah.
Maybe closer to 300, 400. So that second tier is a lot more stable in grains and oilseeds. And that's been through acquisition, organic growth, bigger volumes. Like Australia produces a lot more grain now. So I think some of it's that. So that's been interesting. And I guess the East Coast market is a little bit less concentrated than it used to be as a consequence. But the flip side of that is there's not as many traders. So you don't have the dynamic sense of people trading relative value as much as you did 10 or 15 years ago. And I think that was one of the key takeaways of the recent project we worked on for the ASX was this number of traders around. What has stayed the same? I'd say Australian agriculture, the innovation very much seems to be before the farm gate. So the farmer, because it doesn't get supported here in Australia, remains innovative, remains productive. They are looking at ways to add value to their production through, farm storage, different ways of selling. etc. So I think they have done well over the long term, despite the fluctuations that you get in Australian weather for agriculture. So I think, that was always the case. I guess that's persisted. But I still think there's a lack of, certainly in sort of what we have done in our careers, trading and dynamism. It's still pretty, the incumbents have kind of embedded their position. And so it'll be interesting to see. I think what could shape that up is the potential here for biofuels and renewable fuels to have a bigger impact. And so the energy markets and the energy players, if they start operating down here, how will they interact with the local incumbents? Some of the local incumbents like GrainCorp already operate in that space. Some of them don't. Some of them have big offshore presences that do trade those markets. Some of them don't. So it'll be interesting to see how that changes, I guess. And then I think more broadly here, the Australia's energy policy, whether that be for power through, renewables, wind, solar, etc., how that build out happens, if it is successful and at what cost. And then also I think what has become apparent to a lot more of the population rather than just people focused on energy and markets is our lack of, I think COVID really showed our lack of resilience in terms of available supply of fuels to run Australia. I think there was an article out today saying we have 29 days worth of fuels within Australia. Now, don't quote me on that, but it is, it's not much more. I think at the best, it's like 60 days. So would a renewable fuels industry here change that, make us more self-reliant, make us more independent from an environment that's changing very much geopolitically? So that's, I think, going to be a theme and how that plays out. I'm kind of with you on carbon. I'm not too sure how that plays out here. I'm hoping it is a success because I think it will drive some good change and drive some interesting outcomes and potentially be good for some different players in the supply chain that don't get exposure or don't get rewarded for being good operators. But yeah, that's where I see it. And I guess on the metals and mining side, rare earths, which are never so that rare, does that get more uptake here given what's going on again with geopolitics? And then the very unpopular one around nuclear and mining of uranium and things like that, does that change, I guess, going forward? I think it's going to take a big change from a society perspective to see if that is going to actually happen. Yeah, I guess having come back, having been in the ag sector before, banking sector before, still a lot of the players are in the same seats as they were 10, 15 years ago. So there hasn't really been a change of the guard, let's say, in a lot of the shops that either we've worked for or worked alongside with, or our competitors or our clients. But I think that'll change in the next 10 or 15 years, just purely from a generational thing. Most of those people are getting towards the tail end of their careers. So, but do we have the young commodity traders? Does he or she, do they exist? And let's hope they do. And part of starting this podcast was to try and get people interested in commodities again and hopefully share experience of ourselves, but more importantly, the future guests that are coming online to get to understand more about commodity markets, Australia's place in commodity markets, and hopefully we can get people a bit more excited.
Yeah. Well, I think there's some interesting points you made there, like on the renewables, the potential growth and build out with of renewable energy companies alongside agricultural companies. I mean, do you think that there is a lot of potential for offshore energy interests to come into Australia and look to acquire a footprint via agricultural businesses?
I think so. I think they're pretty savvy though, so they'll probably wait for a drought.
We must be due for one.
Yep. So it's been 5 or 6 years since the last one.
Yeah.
Now, whether, and I think the FIRB has always been pretty resistant to that, depending on where the interest comes from, I think maybe they'll maybe perhaps be a bit more open. Certainly if it comes with some guarantees around securing supply of other energy. So despite being very energy rich, we import all our crude. We seem to export all our gas, so we can't quite work that one out either. So there seems to be some issues around how we become energy resilient. It's a pretty, let's say, geopolitics in a state of flux. So where Australia is probably one of a few countries that's very much caught in the middle of the trade war between China and Australia, with our security partner being the US and our economic partner being China, how well we managed to navigate that. So far, no major repercussions, I guess, but that could obviously change pretty quickly. So I think there's some good opportunities. I think it'd be nice to see something organically grow here from mining companies and other energy related companies that do make a lot of money here in Australia that gets reinvested here in Australia instead of just going to shareholders or taken offshore by overseas shareholders. So we'll see. Yeah, it'd be hard to see one of the Australian owned large grain enterprises being taken over, right?
Yeah.
That's tried in the past. But
that's right. I think it'd be more along the lines of those second and third tier players, like you say, that have, which probably would look attractive in their value's gone up a lot in the last 10 years, and they've gone from probably being, 4 or 5 people in a business, maybe 20 or 30. I think those sorts of enterprises have increased their networks, and they have a good footprint and a good franchise that offers value. But I think there's an interesting interaction when we look at renewables, carbon, and I guess power markets, but that overlay of like the politics and what has to be navigated there, in relation to, like if you look at renewables, and you have more experience on this, but like how much of a play is it going to be between food v fuel?
Yeah. So I feel like that narrative has changed a little bit because the reality is the bulk of our exportable, or all of our exportable tallow goes to fuel. Well, maybe not all, but 99.9%. The bulk of our canola goes to Europe to turn into fuel. Any used cooking oil here in Australia that's exported and gets used for fuel. And so the food aspect, I guess, is really around canola. Here we have an issue where we don't have enough crushing capacity to create the oil to then go into the refinery to create the fuel, but we grow enough canola here.
Yeah.
I think that's probably the most likely / cost-effective way of moving forward. And I think that would be, be good for the regional economies. It would be good for our strategically, because it would be, be able to produce our own fuel for diesel, for, mining, army, trucking, rail, and then also aviation fuel. Strategically, that would open up, a lot more independence than we have currently. I feel like as the green hydrogen thing kind of melts away into the background of not being feasible within a reasonable time frame, that at least the existing federal government seems a lot more open to the idea with that recent funding announcement. So unfortunately, the economics still don't work at this stage, but I think if you're building out a new supply chain of fuel, the economics never really make sense on day one. And you've got to get it to a place where the cost of SAF and the cost of renewable diesel is relatively similar to the current jet fuel and regular diesel. And I guess that's going to take some time and some investment. And it'd be interesting to see how that plays out. But I do feel like I think it's reasonably popular with votes. I think people understand that most of the canola is going offshore for fuel anyway. So why does it? And if the current trend's going to happen, we'll just be importing sustainable aviation fuel and importing renewable diesel from canola that was grown in Australia, which seems kind of counterproductive.
Yeah,
not particularly green.
You look at, say, the sugar industry. We produce between 4 and 5 million tonnes of sugar every year. Our consumption's largely unchanged domestically. We send it offshore. We've got ageing infrastructure up there. It's a great opportunity in these regional areas to potentially reinvigorate these well-established industries and give them a really good overhaul. So yeah, I think there's a lot of positives in that potential build out. And when you discuss numbers like, there could be 29 days of fuel or 60 days they're quite stark reminders of how that's right, how fragile the system is. It's a really good opportunity to strategically move your dependence away from these imports and actually bolster. And even if it is only heavy industry or mining or those sorts of areas that benefit at the start. Yeah, absolutely. I mean, I think carbon's an interesting. We mentioned carbon markets before. For me, one of the biggest risks still is the changing playing field that it operates on, and that comes back to government, which is the regulator, and how they decide to change the rules. On the hop, they can change rules. They can, issue more accus by changing methodologies, and that has a certain effect on confidence in the market.
Yeah, well, I think given the state of the opposition federally and in most states except Queensland, it's hard to see a swing to the right in politics. 3 years is a long time in politics. Or they say a week is a long time in politics.
Yeah.
Obviously, things could change. But I agree. That's the biggest risk. And I guess it's the closer we get to, I think, some of the recent announcements, I think there's also a lot more pushback on some of the claims being made by certain groups and interest groups that, that aren't really stacking up. So I think the wider population is becoming aware of that. I think the wider population is aware of, obviously believes in climate change and wants to reduce emissions, but not at any price. And I think now that the power prices just keep going up, and if they're not going up, it's only because we as a collective are paying for them to be subsidised, which means we are paying for them indirectly. I think people are waking up to that fact. A long time coming. And so as the subsidies either don't get paid anymore or aren't politically palatable, it'll be interesting to see how those things kind of play out. But I think it needs to be, as the energy policy as a overall target should be, let's lower the cost of energy and at the same time aim to reduce emissions at an agreeable rate rather than trying to set up some targets that are not set in reality whatsoever, and then it just end up leading to disappointment or ridiculously high costs, which is kind of what the path has been to date. Yeah, so I think, Australia, so I think a lot is changing. So for us, in terms of my business and, working together with you, what we're really looking to do is try and help people navigate a lot of uncertainty, because I don't think anyone really knows what is going to happen from a geopolitical perspective, from a domestic political perspective. And it's really like how you navigate those changes, how you have your business be able to prepare if things negatively impact you, but also potentially create opportunities for you. What new businesses could you go into that could leverage your existing business, your existing skill set, your existing infrastructure to take advantage of these new opportunities? And that's where I really see the growth for us here in Australia is helping in the new industries and ideally bringing the legacy industries and legacy businesses along for the ride to then, be able to exploit these opportunities.
Yeah. Okay. I think there's some exciting things happening outside, as I mentioned at the start of the conversation around getting outside the four walls of the big institutions and the large corporates. And then you start talking to people who are, running their own businesses and building out, technology businesses that can be used in commodity businesses. There's some really exciting stuff happening. If you were building out a commodities business, what you can leverage off, it's a game it's such a different game now to what it was 15 or 20 years ago. Like when I first made that move into banking, which was over 25 years ago, I still had a pocketbook pager.
Yeah.
Sort of the sugar price would come ticking through on this thing. And within, 12 months, we were on Bloomberg Anywhere. And since then, it's just been like, extreme rate of changes to what your access to information and what you can do, which is fantastic, and it still keeps going. So it's a bit of an arms race on that front, I think, and I think that's where we can keep businesses relevant in conversations that we have on a platform like this as well.
And that's the aim of starting this podcast, which has been a long time in gestation, but finally getting going. And going forward, it'll be trying to focus on a few areas that clients are either asking for more information, and as a consequence, we have some interesting conversations, or selfishly just areas that I'm interested in. So It'll be in things like trading and portfolio management, risk management, some of the new industries we've spoken about, renewable fuels here in Australia and carbon, and then also some of the digital changes, how systems are changing, the requirements around provenance and tracking of data around commodities, whether it be because of human consumption or because of tracking carbon intensity for, inflation that's coming. I see that there's a lot of opportunity and a lot of change. So
Yeah,
it should be good.
absolutely. We'll get the opportunity to talk about macadamia nuts at some stage.
Of course, yes. Macadamia nuts, the growth industry of Australia.
Cottage industry. Exactly.
All right. Thanks, John.
Thanks, Henry. That was great.
See you next time.
Cheers.
I hope you enjoyed this episode of the GSX Podcast. You can find out more about GSX at greatsouthernx.com and follow us on X at GSX Commodities. You can also follow me, Henry Walsh, at H2Walsh. Until next time.